All right, traders, let's get after it. This is the weekend edition. Good through Sunday, December 15th, 2013. And the markets end the week mixed. On Friday, you'll notice the S&P was slightly in bearish territory when everybody else was in bullish territory, but the banks did not support that. And the fear ended fairly strong, up 1.42% on the VIX, closing out the week, but a little bit of a bounce here on precious metals. And taking a look here at the S&P daily, what you can expect on this video is I'm going to be moving very fast. We're going to be doing the daily, weekly, and monthly on a number of things. So stay tuned, buckle up. Here it is. The S&P double top, trend reversal in play. So this is a trend reversal. This is a confirmed double top based off of the lower trend line being broken and this swing low being broken. The only thing that is remotely bullish right now is after this bull pullback, we do have a tweezer bottom, which is normally pretty bullish. Now, for that to be bullish, we need to get over 1781. You'll see that right over here. Feel free to increase the video size to full screen to watch this in high definition. Anyway, we are looking for, if we do get above the 1781, more upside potential here. But the markets look quite weak. On the weekly chart, this is quite damning. We have a rising wedge, bearish divergence for the most part here on the MACD, and we close out the week below a major area of support on this rising wedge, confirming the drop. In the MACD, we do have a crossover and we are heading southbound. That is bad. If you look here at the monthly chart, we are at a resistance area, and so far we have what's called a bearish harami. And that tells us we could have a few months of bearish activity here, getting back down here to this lower support line before we could find some support, maybe for a bounce, if not a breakdown through that. All right. Here's the NASDAQ. NASDAQ, a couple things I want to share with you here. If you go back in time, you'll see this blue line. Look at the trajectory. We have resistance and resistance, and we go higher here. The problem is we missed hitting that area of resistance. So we drew another line, a slowing of trajectory. And then we pulled back, we rallied higher, and then we dropped, missing this red line, even a slowing of trajectory. And there we broke down, and we are finding ourselves with a tweezer bottom and a close below for the third trading day in a row, below the 20-day moving average. Take a look here at the weekly. The weekly, we had this rising wedge. If I go to a line chart, you'll see how we're pinching support, resistance, support, resistance, support, and then we broke down below it. And you'll see that we closed right at 4,000, which will be a support level, but we did close below it. This is problematic. Watch for a lot of downside potential here. On the monthly chart, we are up, up, up and away. So far we have a tweezer top and kind of a what's called a bearish thrusting pattern, but this is still dynamic. It is not static yet, so anything can happen, and it certainly will. And take a look here at the banks daily. We had this little triangle. We broke down below it. We are finding resistance at the rising 20-day moving average. It looks slippery here. The weekly chart, you'll see that we have a line coming up right here. Resistance. This is a big rising wedge, and we're starting to head down with a nasty looking bearish divergence here. Ouch on the banks. Remember, the markets are only as strong as the banks there to support it. This looks problematic. Here we're heading higher, 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 showing some weakness on the banks. And here's the gold read. The gold, as far as the monthly is concerned, looks really bullish. We're at a major support level with a doji. And we're right at resistance, like it's wanting to pop. Here's the weekly chart, again at the support level. For the week, we rallied higher, 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 touched that resistance line and came right back down. That resistance line goes way, way back here to October 2008 and comes over right here, 2013 in May, June, July area. We went up, tagged it, came right back down. So if you want to draw that line, that'd be great. On the daily chart, we had this big gap up, gap down, island top. We're starting to come up, feel a little bit of a gap here, but the precious metals are in grave danger. Silver, same thing. Gap up, gap down, island top, big time issues. If you look at the weekly chart, we're at a support level, we're in a triangle. It could go up or down here. Watch for a breakout or a breakdown. On the monthly chart, you're at a big time support area. If it breaks out, woe to the markets as far as the precious metal markets are concerned, or we could rally from there. Anyway, and like we usually do, Apple, this is a monthly chart. We're pushing the 61.8 Fibonacci right now on the bearish pullback. So that's bearish. If you look here at a weekly chart, big kind of rising wedge, we're at resistance. Watch for a breakdown. On the daily chart, looks bullish. Nice bull flag, bull pullback to a support level. Look for a rally. So with this, let's take a look at Facebook. Now, Facebook on Friday was up 2.9%, big rally. Look for resistance. So if you're playing this at 54.21, and on the weekly chart, nice bull pullback hammer, boom, to the upside. We have resistance around 54, 55 bucks. And on the monthly, this thing's building this high base like it's wanting to rally north still. Google, as far as the daily is concerned, pulling back to a support level in an uptrend, but I don't like the volume. A lot of selling coming in on this. And if you look at the weekly chart, we're pretty extended. You'll see that we have up here a shooting star reversal pattern, and it looks like we have some downside potential. And for the monthly, we're slowing down on momentum at this 1100 mark. We have a doji. It looks like it's wanting to do a pullback. LinkedIn for the month, nice bull pullback, starting to rally. For the weekly, the problem is we're in an uptrend at a support level, but we can't get off this support line. That is usually more bearish than it is bullish, giving us a bear flag type formation on LinkedIn. So watch for a breakdown. On the daily chart, nice bull pullback, and it looks like a buying opportunity perhaps, but the volume's coming in on the sell side, which is not that great. We're caught up in the moving averages, not that great. Microsoft on Friday sold, it was off by 1.4%. Big sell-off here. We're approaching a buy opportunity, so watch for a support level at the rising 50-day moving average. And if you look here at the weekly, we hit resistance. We're just retracing. We could come down, look for a buy opportunity around $35.70 on the monthly chart on Microsoft. We have a little support coming up here soon. And Twitter was up 6.6% on Friday. Look at this, up, 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 and away on the weekly chart. Small bull pullback with a hammer, and boom, to the upside. We have a whole dollar amount at 59 where we could close. Look for 60 also being around dollar area of resistance. We're almost there now. Things that go up fast tend to retrace fast. So exponential moves to the upside tend to retrace quite quickly. So be ready for that. If you are ready, this is a perfect time to be looking to say, I need to be a better trader going into 2014, and we can certainly help you do that. Many of you have yet to take the next step, and I'm encouraging you to do that. I myself went through mentoring, and that's how I got to where I'm at today. And we have a lot of products. Things that you want to do is take the 101 courses if you're just starting. Take the 201 courses if you've been trading for a little while and you need to get to that next level. Small investment in doing that. And then from there, do your mentoring. So anyway, I'm going to leave you with that. Merry Christmas. This is a great weekend edition. Spread it with a friend. Catch you later.